Insurance. This is Tony Cañas, and today I want to talk to you about the $75,000 rule. And it's not really a rule, but it is a great guideline. It happens very often that I get a call on Chat with Tony. The ultimate question that the person is trying to answer, or a big piece of what they're wondering about, is, am I being paid fairly? And also, should I pursue other opportunities just for the money? Also, I love the company, and I love the job, but I feel way underpaid. I'm always stressed about money. All of those questions, all those career questions, I always tend to answer them partially by talking about the $75,000 rule. So the $75,000 rule, that is my name, not the official name. It is based on research by the famous psychologist Daniel Kahneman and economist Angus Deaton. And this research came out in 2010. They did the analysis in 2010, but it is based on data that Gallup put together from surveys they did in the US in 2009. I actually, today, I actually took the time to read the research itself. I had read many articles about the research, but I had never actually read the paper. So I read the paper, and I also read another paper today called Happiness, Income Satiation and Turning Points Around the World. That one is from Nature magazine. They are both peer-reviewed papers that have looked at this question of does more money make you happier? And ultimately, what it comes down to, there's a lot of nuances to it, of course, but what it comes down to is more money does make you happier to a point. And that point appears to be somewhere around $75,000 a year here in the US. And of course, number one, that's 2010 money. Number two, that number will vary by the size of your family, by how many dependents you have, by where in the country you live. 75K in Des Moines, Iowa is very different from 75K in San Francisco, California, right? So you have to take into account cost of living and stuff. But in general rule of thumb that I tell people is that if you're already making above 75K or its equivalent in your local area, chances are that more money is not gonna make you happier on a day-by-day basis. My own case is very illustrative of this. I like to tell people my own case when we're having that Chat with Tony conversation about money. Ultimately, so if you look at me, I started my career in transportation in 2006, a base salary of $35K a year in Des Moines, Iowa. A very cheap cost of living area. At the beginning, $35,000 a year felt like a lot. It felt like, holy crap, I've been living, during college for like 12 a year plus tuition. 35 felt like I felt really well paid. And little by little, well, I got married and we didn't have any kids or anything, but little by little you realize that 35 is not that much, right? 35 doesn't go that far, even in a low cost of living area like Des Moines. I got a few raises in my career in transportation. I was there for 3.5 years. By the time I departed transportation, I was making about 43, and I was fairly comfortable, but the job was really stressful. And I fell into insurance and took a little bit of a pay cut to come into insurance, recovered fairly quickly, and kind of stayed in that 40 to 45 range, again in a low cost of living area, for the next few years. It wasn't until I hit the financial leadership rotation program that I got a significant raise. In all those, in all that time that I was in claims and in my first underwriting job, when people ask me, I was doing all the investigating myself, all of that CPCU and all that stuff, all those designations. People asked me what I wanted to do with my life, and I kept saying I want to be CEO of Nationwide. And I figured that if I don't make it to CEO of Nationwide, I'll end up becoming CEO of a smaller company, and that's cool. Fast forward to today, and I don't even want to be a manager. I don't want to be a C-level executive. No way. I figured out that for myself, my happiness is maximized. Number one, in a job that maximizes the use of my strengths, which happen to be in the persuasion, in the communication area, the motivation type of areas on stage, rather than in analytical areas. And also, I found that money was the reason, ultimately, that I wanted a C-level role. It was because, in my mind, the only way to be comfortable with money was to get to a C-level role where you're very, very highly paid, and I was willing to make any sacrifice necessary to get there. In fact, if you asked my mom or my sister, if you asked my family back in Costa Rica where I grew up, almost all of them would describe me as very money motivated. If you ask my girlfriend or her family, and I've been with her for 8 years, almost 8 years, they would describe me as not very money motivated. So why that difference? Well, what it comes down to is during the time that I've been dating my girlfriend is the time when I hit that magical threshold of 75 or thereabouts a year. And I started the money became a lot less of a worry. I have the money to pay my bills every month without so much worry, to clean out my credit card. Maybe not every month, but at the most, I won't carry a credit card balance for more than a month or two, basically. If we go on a big trip or something, I'll be able to clean it after a month or two. I can buy my toys, my electronics. I can travel with Renee. She loves traveling. I can do basically everything I want to do. I can save for retirement properly. I can do everything I want to do. So right. I'm not particularly motivated to make a move based on money. And there are things like working from home and having a job that gives me lots of flexibility and selling a service that I love, which I do. Those things are more valuable to me than more money. And I've said before that I would not give up my work from home setup, go back into the office for a 50% raise, because it simply wouldn't be life-changing anymore. And I think that, and of course I don't have kids. I live in Atlanta, or before I lived in Ohio. So I live in fairly low cost of living areas, or fairly moderate cost of living areas. In conversations with others, I have found that this is fairly accurate. So that's the advice that I give people, and I quote this research. The advice that I give people is ultimately, the exact number is hard to know. If you are at a point where you can pay your bills without stressing about paying your bills, if you are at a point where you can save for retirement and for your kids' college, if you are at a point where you're not constantly thinking about money, it's not costing you constant stress, then I would not make a move solely for the money. Because once you're at that level, working for a company that you believe in, working in a product or service that you believe in, working for a leadership team that you love working for is so much more valuable than extra money. Just wanted to share that. I went and read a bunch of articles to create this video. I will include a link to all those articles. Check them out if you want to read more. Read the two papers if you want to read more. The papers are not perfect. The first one especially has been criticized a bunch. But ultimately, I find that in general, it's good advice. Early in your career, look for those big promotions and take the risks. Stay within your strengths. We'll talk more about that, about working in areas that fit your strengths and using strengths finders. And then later in your career, once you are at a point where you don't have to worry month to month about your budget, then that's the time to make a decision based more on the right challenge, the right job, rather than your nominal salary. Thank you.